music, it's time for us to talk.
It is time.
Good morning.
Good
Good
morning,
morning.
Carol. We have a special guest with us today. This is Paul Cook from Guidant Financial.
Hello, Boyd.
Glad to
Hello,
have Paul. Good
Carol.
morning, Paul.
Good morning, Paul.
As we talk about in just about every single business funding webinar, we talk about specific funding options for startups. The syndicated line of credit is one of them. Another popular one is using what's called the ROBS Act, ROBS. Carol, what does ROBS stand for?
Stands for Rollover as Business Startup.
Rollover as business startup. And so
Mhm.
it's growing in popularity, with that reasoning. Like, if you don't have to borrow money, why would you borrow money, right? Maybe you can be your
Mhm.
own bank. And so this ROBS Act is, just to give a quick overview, and Paul will talk about it more. The ROBS Act is a program that allows you to use retirement funds that you have set aside, to use them tax free, to help you purchase or start a small business. And so we wanted to have this opportunity to have Paul come on and talk about this program in greater detail. As I said, it is growing in popularity. So Paul Cook from Guidant Financial. Paul's in my hometown of Bellevue, Washington, where he assures me it is not raining today.
Not today. It's
I,
August. So.
it's August. I traded Bellevue for Florida many years ago, and there's still a lot I miss about Bellevue, but I get the same amount of rain here. It just comes all at once. So, Paul, as someone who's been working at Guidant Financial and working on the ROBS Act for quite some time, can you give us a high level overview of really what it what the ROBS Act is, and what is the best application for it? Is it making a down payment? Is it buying the whole thing? Whatever can be done with that. Take a moment and describe that for us.
You bet. You bet. Yeah. Thanks for having me again. And Carol, nice to meet you for the
Nice to
first
meet
time
you
as
too.
well. It's interesting. Robs has been around, not with that name, but Robs has been around since 1974, if you can believe it or not, right? Back in when the ERISA Act was written, in 74, we always could have invested our retirement dollars into non-traditional assets. The Merrill Lynch's and Charles Schwab's of the world aren't going to tell you that because they don't
Hmm.
want you to move your money, right? But it's
Right.
been around since then. We've been doing it since 2003. But the gist of a ROBS is like Boyd just described. You can move your qualified retirement dollars without tax or penalty. Because if you were to take it out, you're probably going to get hit with a 10% penalty based on your age. Horrible decision. All right. And you've got taxation coming, next April. So to avoid the tax and penalty, you do a rollover. And this rolled over money now basically buys stock in your own company. You brought a
Mhm.
partner to the deal, and your
Hmm.
partner's not your buddy or your spouse. Your partner is your retirement account. All
Your own
right.
money.
So you've got this
Correct.
funded entity now with some cash, by the way, that hasn't been taxed yet, right?
Hmm.
And this cash now can show the broker, the seller, the lender that you now have the capital to either go buy that business outright. Okay.
Hmm.
You may not need a loan at all. Use it as your down payment towards debt financing. So it makes you a
Hmm.
better buyer and borrower. If
Like
it's a
an SBA
startup, yeah,
7A. Hmm.
exactly. Yep. SBA 7A probably. If it's a startup, you're self-funding your own deal. Okay. So I'll close with this little statement here because I always say it because people want to understand what their return is. This is a risk. You chose to take your retirement dollars out of some sort of diversified, maybe up and down portfolio, right? Depending on what Wall Street does today. And you bought a whole bunch of stock in a single company. All right. But it's a calculated risk because you invested in yourself. The idea of Rob's. Hopefully, when you're done, I don't know, 5, 10, 20 years from now, and you've got an asset that you've built up and you want to retire, sell the business. A big fat pile of cash goes back to your partner, and your partner again was your retirement account.
Your retirement account.
Yeah.
Very nice. Very nice. I wish I had known about this
Mhm.
back in 2008, when everything was very difficult, and I was not. I was in a situation where I had to. I chose to gut my retirement account, and
Hmm.
I needed the money at the time, and I paid for that dearly. I think it hurt more than I thought it would. And
Yes.
if I had known I had the option at the time to use that to buy something, because I've bought several businesses, started several businesses. I could have used that and saved myself a bunch and
Yeah. Yeah.
built something better at the time.
Yeah. Well, there's times like the '06, '07, '08 window, right, where we all were
Hmm.
going, all right, what are we
So
gonna
what do we do
do
now?
here?
Yeah,
And
yeah,
it's unfortunate, but it's lessons learned and kind of water under the bridge. This
yeah.
Rob's strategy still is, even though we've been pounding the pavement on this product, this service since 2003. It's still a pretty well kept secret. So I appreciate getting on podcasts and events like these to just get the word out and help people.
Sure.
I'm really just here
Yeah.
to educate folks.
Well, it's important. We deal with dozens of entrepreneurs every single week, calling us, contacting us, asking for advice for how to get funded. And that's what we specialize in, is finding funding for startups. And we always, like I mentioned, we always say, oh, no, this is also an option to use your own money. You don't have to borrow if you don't need to. And some people say, "Wow, what a great idea!"
Mm-hmm.
And some people say, "Oh no, I'll never touch my retirement account." Like, okay, that's fine. It's a personal preference. Um, Tell us who qualifies
Yes.
for the Robs Act.
Yes, I'll probably tell you who doesn't because that's a shorter list.
Okay,
Okay.
sure, yeah.
Quite honestly, it can work for just about everybody, but there are some instances where either the rules don't allow or maybe the type of funds they have may not
Hmm.
allow. So, a couple comments about rules. These are actually exemptions to some Internal Revenue Code that allow ROBs to work. All right.
Okay.
Exemption number one says it's got to be an active operating company. That's
Okay.
easy. That's something that is, any business providing a product or service in exchange
Hmm.
for payment. So it can't be a passive investment. Okay.
Hmm. Okay.
The second exemption is how it's funded. All right. So again, the retirement account is going to buy a very specific type of stock from the corporation. All right. So
Hmm.
structurally has to be set up that way. Um, what it doesn't work for, okay, it doesn't work for the passive investment I just mentioned. Right now, you can't do cannabis businesses because that's still not
Right.
federally approved, right?
Right.
Mm-hmm.
The type of funds are really the kicker, meaning what kind of a retirement account can you use? There's a lot of different retirement accounts. There's thrift savings plans if you're a federal government employee. There's 403bs if you're coming out of nonprofit. There's 401ks, pensions, lots of different kinds of accounts. There's three that you can't use. Okay, you
Cannot.
cannot use a Roth IRA. So you can't take a Roth IRA backwards, if you will, and put it into this new 401k. If it's in a Roth 401k, you're okay, but a Roth IRA, you
A
can't.
Roth
Okay.
IRA, no. All right.
Inherited IRA, unless that
Mm.
inheritance is from a spouse, which is rare, right?
Oh,
So if I've
okay.
got an inherited IRA from mom or dad or grandma and grandpa, I still have to fulfill my distributions at their schedule, right? And
Oh,
and
okay.
and pull that money out over a period of time. Usually it's 10 years and pay the taxes on what my mom or dad didn't yet pay taxes on. Okay.
Okay,
So
great.
Okay.
if it's inherited
That's
from a
good to
spouse, you're
know.
okay. Yep. Um, what's the last account? Okay, the type of account you can't use is typically you can't roll over a current employer plan unless you're going to leave that job. All right.
Okay.
Now there's a couple caveats there I can talk to people about, but generally you can't roll money out at the place where you currently work. So
Okay.
yeah,
And that's something we've understood and we've mentioned over the years and times we've been talking to people, is that needs to be an account with a previous employer.
correct. Yeah.
And I've always thought, well, that's not really convenient. But then I thought, well, with all the layoffs that have been happening, a lot of people wake up one morning and now their IRA is with a previous employer, right?
All of a sudden,
Um, all of a
yes.
sudden, I have a previous employer.
Yeah.
Yeah, and those are hard mornings. But then suddenly it's like, oh yeah, that money is available, and that's always an inflection point. Obviously, for somebody who's just lost their job, they wake up and they have nowhere to go the next morning. That's an inflection point, and many people choose to start a business, or I think fewer people think to buy one, but a lot of people think to start one.
Hmm.
And so it's good to know that, well, okay, if you just lost your job, that's now a previous employer, and that money is available to use to start or buy a business.
Yeah, definitely. I mean, when layoffs increase, we get busy.
I'm sure.
When the market has a good run, like technically it has, if you look back over the last 10 years, there was some
Hmm.
significant wealth made, right? So if you're in your late 30s, early 40s, and you were saving religiously, right, into your retirement account because that's what your dad told you to do, right?
Right.
You actually have a pretty big account right now. You're probably in the two, three, four, 500,000 range. Still a
Hmm.
fairly young individual, in my opinion, based on my age, you can tell. But that's a chunk of money that they didn't think they had access to. And the
Right.
comment about startups or acquisitions, I can start up a business, probably a franchise, maybe because I haven't done a
Yep.
business before. So
Yep.
I'm looking at some sort of national brand or some sort of supporting systems behind me.
Hmm.
But if I want to go out and look for a business to buy as well, I may think I don't have a lot of buying power because I haven't heard about Rob's yet.
Hmm.
Well, if I've got a couple hundred grand in a retirement account that's again going up and down in Wall Street, and I'm only looking at two, three, four, $500,000 businesses because I don't think I can afford it. Well, an SBA 7A loan only needs 10% down.
Right.
You can start looking at one, two, $3 million businesses, and I know
Absolutely.
that might freak people out, but consider what kind of cash flow a one or a two or a $3 million business throws off
Hmm.
versus the two, three, four, $500,000 business.
Yep. Oh yeah.
You're not buying yourself a job, if you will. You are really
Yep.
setting yourself up for the
At
future.
that
If
point,
you
you're buying a company. Yeah, you're
exactly,
leveraging your 10% into something more. Now,
exactly.
one thing I need to throw in there too is with the SBA 7A, they will require that you also have about that same amount in post closing liquidity. So you can't spend it all, but plan ahead and you can still leverage the heck out of that money.
That's an
Okay,
excellent point. A
buy
lot of
something.
a lot of people you run into probably you're
Mhm.
looking at their PFS and they've got their personal financial statement. Sorry for acronyms. You're looking at their
Mhm.
statement and they are they've got a pretty good handle on some cash. Depending on how many kids they've got and if they're paying for college yet, they've got somewhere in the 50,000 to 100,000 maybe in cash, right? But if they were going to use all of that money as their down, now they don't have
Right.
what you just described, which is that post closing liquidity. So if I can help you preserve your cash, it'll make you feel better just personally because you've got money in the bank to take care of the bills at home, so to speak, while you
Hmm.
start up this franchise or while you take over this new business. So
Hmm.
preserve your cash, use your ROBs for your down
Yeah.
payment. So
Yeah.
good point.
Wonderful. So, how much time does it take? Roughly, how much does it cost to get everything done and set up so I can access that money and get going?
Yeah, good point. And I'll give you again a little bit of a long answer. I'm going to say that clients have three timelines, right? The timeline they're on is probably the try to find a business to buy.
Hmm.
That's the never ending, will the date ever come timeline,
Yeah.
right? We don't know
Yeah.
when it's going to be. The second timeline is if it's a debt instrument needed on a business, is probably SBA generally or some other type of debt instrument. SBA is probably a solid 60 to 90-day window, depending on
Yeah.
where you're
That's
at with the
generally
bank.
here.
We
Nine.
know.
Yeah.
Yeah,
90
yeah, there you
days.
go, Carol.
Yeah.
We know
Yeah.
it's a little bit painful, but it serves its purpose as well. So have
Yes.
patience with the banks. Um, Rob's timeline's about 4 weeks, right?
Four
So
weeks.
Oh,
yeah, about
That's not
30
wow.
bad.
days. It kind of depends on the
Okay.
client, depends on the state of
Sure.
filing. I would say this. Most people don't get started with Rob's right now. I haven't even found a business yet. I haven't even talked to a bank. That doesn't make
Yeah.
sense, right? But we need to make sure those timelines come together. All right. So don't wait too long and call me up and say,
Right.
hey, I've got to close next Friday. Well,
Yeah.
I'm going to remind you, 30 days. Fees are simple. It doesn't matter how much you're rolling over. You can roll over 50 grand or 500 grand. Our fees don't change. Base price, I'll give you that, is 49.95, 5 grand, basically.
Okay.
Some states might have additional filing fees. Some deals might be more complex. We'll talk to your clients about that, but almost everybody's paying about 5K. And really, what you're buying, you're not buying a ROBS, right? You're not buying you're getting the result of a ROBS. You're getting your corporate entity filed and your 401k designed and the money rolled over properly and all of the dotting of the I's and crossing of the T's to meet,
Mm-hmm.
these IRS guidelines. What you're paying for is peace of mind, comfort, assurance, right? The fact that you're working with a company that knows the IRS rules inside and out and are going to take care of you on the back end as well. That's where we hang our hat. So,
and you avoid the 10%
no penalty, fee. No tax. That's huge. And I never say that out loud because to me that's a given, but that's probably the most critical piece. That's a good point, though. If somebody is just coming up a little short on a deal and they need 20, 30, 40 grand, and they're going to pay me 5 to move 20 or 30 or 40, I'm probably going to talk you out of it. I'm probably going to try to find a better option for you.
There you go.
We don't want to charge you 5K if you're moving 20. That's not right. That's not right.
Yeah.
Exactly.
Yeah, wonderful. Well, it's an excellent option. Maybe not for every single person, but it can be a great solution for somebody who maybe just lost their job, right? Or they've chosen to leave to begin a different life. And so 4 weeks, maybe $5,000, they can get this all set up. And instead of going to the bank and asking for money, you can use your own money, which in some cases is a better way to go.
Yeah, certainly. I mean, I would think you want to leverage as well and get some debt if debt is needed and if you qualify. If you don't like debt or can't qualify for debt, certainly this is your option. I say it this way. You are hedging your bet against an unpredictable Wall Street. That's what you're doing, right? And you're going to buy a bunch of stock in one business. It's your own business. So do you have faith in yourself? Right. That's the key. Do you have faith in the business you're looking at? That's the key. And really, again, deciding that this is what I want to drive forward. I'm going to drive it forward with a little bit of my capital and maybe all of my capital if I'm not going to get a loan. And you are, creating your own business and or acquiring a business that maybe you didn't think you had the bandwidth or the ability to buy. So it's a fun place for me to be. I've helped people buy some really cool businesses and crazy harebrained ideas too. But I'm not going to burst your bubble. I'm gonna ask you questions like, "Hey, do you have a business plan for that?" But
let's see the thinking on this one.
You bet. Yeah, if you've got the capital, you've just made yourself a better buyer and borrower, and you're going to invest in yourself. That's what ROBS allows you to do.
Yeah, nice. Yeah, for an entrepreneur, for that sense of independence that so many Americans have, it's nice to, in this case, for the chance to be your own bank, to really be in charge of your own destiny in that sense.
Yes,
that scares some people to death, but other people just embrace it.
Yep.
So that's wonderful.
Well, again, that's a great point because we've been taught our whole lives, don't touch your retirement account till you're old.
Yeah.
Okay. Or you can't touch your retirement account because you get taxed and penalized.
Yeah.
Both of those things have truth. Okay.
Yeah.
But we didn't know about this other thing, right? This other thing that allows you to invest somewhere else, and that somewhere else is on your own shoulders, on your own back, and drive it forward. So
for sure.
Yeah.
Absolutely. Why to borrow from a bank if you don't need to? You have money there.
You could avoid debt altogether, and some people see debt as the probably the scariest factor of getting into business for themselves. Can my business afford the debt?
And so you mentioned peace of mind, and if I'm not making payments to a bank, that's peace of mind. That helps your cash flow. That helps everything, right?
You bet.
We always encourage people to get the cheapest capital they can. And if it's your own money, it's hard to beat that.
Even better.
Yeah. Well, and eventually a return on that investment as well, because when you go to sell this thing in the future, if your partner, right, owned the bulk of the business because it brought in the bulk of the money, big return back to your retirement account when it's all said and done. So
very nice.
Yeah.
Very nice.
Yeah.
Well, Paul, thank you. I think we both understand the ROBS Act much better than we did in just a few
Yes.
minutes with you. So
No,
we'll be
no
able to do a
problem.
better job explaining it ourselves on our webinars and
Yeah.
such. So
Well, I
um,
think you kind of knew what you were talking about already, but hopefully I
this is
shed a little bit
No,
more light on
a
it.
little
So
better. Yeah,
this is way better
yeah,
to explain to our clients, and
absolutely.
to have this as a resource in our
Yep.
website.
Yeah,
That's
yeah.
good,
really,
good, good. Well,
All
I'm
right.
happy to help you guys. Carol, it was great to meet you in person for the
same.
first, well, kind of in person, but
Sorry.
for the first time. But thanks for having me.
You're
Love to
welcome.
be able
Thank
to
you.
talk to new and prospective and even current business owners that want to inject capital into a business. We'll help them too. So
Absolutely.
Thank
Absolutely.
you.
You're the top of our minds as we talk to people, so we'll keep it that way.
very good.
Mm-hmm.
I appreciate
All
that, you
right.
guys. Thanks so much.
Thanks, Paul.
You bet.
Talk to
Thank
you again.
Take
you.
Bye
care.
bye.